Becoming a parent is an incredible journey. I love it, but let's face it, it can also come with its fair share of financial challenges. However, with some careful planning and smart financial decisions, new parents can make sure their finances remain strong. SchoolsFirst Federal Credit Union is here to share invaluable tips on how new parents can navigate their finances and secure a bright financial future for their family. Joining us today is Brittany Owens, Financial Education Specialist with SchoolsFirst Federal Credit Union. Welcome, Brittany. Great having you here.
Yes, thank you for having me.
I love these tips because we know, the new little one arrives, you're so excited, parents get swept up in the new joy, but there are challenges of parenting. So what tips do you have for new parents to make sure they keep their finances in check while they're adjusting to their roles?
Yes, so first, congratulations to all the new parents out there. I know it can be challenging right now. We're taking care of our young ones, making sure they're nurtured, having everything they need. But we also need to make sure that we're nurturing our finances, making sure we're paying all of our bills, our car payments, our rent, our mortgage, and we'll want to make sure we're paying all those items on time. Because if not, it's going to affect our credit, and that's not what we want to mess with right now. A great tool that we can use is automation, where we have the payment automatically come out of our checking account and go directly towards our bills. It's out of sight, out of mind, and it's going to take some things off of our plate as a brand new parent.
Yeah, because you're kind of sleep deprived. So the automation, that's a great tip. So let's talk about the sweet sound of savings, because it is possible to build an emergency fund. I know that's a crucial money starting tip. What else do you recommend for new parents to make sure that they're prepared maybe for some unexpected expenses or even long-term financial goals like retirement? It seems like it's a long time away, but college too.
Yeah, so I know college seems like it's a long time away, but it's not. Retirement's important, but you hit it. The emergency fund.
Okay.
Yes, having that emergency fund is crucial because these life events can happen, car repairs, medical bills. So we'll want to make sure we're saving at least 3 to 6 months of living expenses. And I know it sounds like a lot, but just getting on those healthy habits, taking some money from our paycheck and putting it into a savings account. And you're going to hear a lot of people say like 300, 500. Do any dollar amount that's comfortable for you. Start small, $10, $20, because something is better in your savings account than nothing at all. Second, after we're starting that emergency fund, if we have not put money towards our retirement, we'll want to do that immediately. If our job has the employer sponsor plan, if they're matching, match the minimum, but just start saving.
Okay.
Lastly, once we started, putting that money towards retirement and our emergency fund, we need to think about our young ones' futures. There's college, a lot of great plans. The most popular is the 529 plan, it's tax advantage, but it allows you to save money, from kindergarten all the way to grad school to pay for tuition and school supplies. SchoolsFirst has the college savers share certificate. It's really great dividends. It has better interest rates than what you would get on a savings account. But there are so many different college and future plans that you can pick from. But it's just, doing the research for yourself and your family to see what works best for you.
Okay, and a little bit can go a long way, so just get started. Let's talk about planning for the future. We know it's not just about finances. Peace of mind is pretty important for new parents too. So what are some key things you think parents should do to plan ahead to protect their children's well-being? We hate to think about it, but in case the unexpected happens.
Yes, I know we hate to think about it. It can be a difficult conversation to have as well, but talking about life insurance, making sure that our loved ones and dependents are taken care of if anything were to happen, to ourselves or the parent. So just making sure that peace of mind is being provided and everyone is taken care of.
And does that, would you recommend maybe creating a will or a trust? Is that part of the important step in protecting your family's well-being long-term?
Yes, thank you for bringing that up. Very important, because if you don't have a will or trust, created, you're allowing the state to make those decisions for you. So a will, you get to decide as the parent, how you want your property and assets dispersed, whereas a trust, you pick a trustee that's going to help take care of your finances if you can't do so, if you pass away or if you just can't take care of your finances, the trustee can step in to assist.
Okay, lots to think about. So before we wrap up, any last tips you have for new parents?
Yes, look into maybe opening a savings account for your young one at a credit union. We're going to be able to walk that financial journey with you as a brand new parent, with your child, and help make great financial decisions and help you reach success and to reach your financial goals.
Having teenagers, it goes fast. So these are great tips to start young and start start now. Thank you so much, Brittany.
Oh, thank you.
Great having you with us, and you can visit one of the many SchoolsFirst Federal Credit Union branch locations as seen on the screen. And as always, you can find out more by going to SchoolsFirstFCU.org. Some great ideas. Get started as soon as you can.